Saturday, February 22nd. So on weekends, I do like to back test, and we actually got pretty fucking clapped on that, right? Yesterday, Friday, the market decided to go ahead and take a dump. And looking at the markets, clearing the charts, and back testing, you always come to some type of revelations, and you're like, yep, this is why, this is why it happened, right? And it's all good. It's all good. I did post disclaimers in each video leading up to this point, though. I did say, hey, you know what? We are at the highs. Looking at, these lows to the highs, we are at premium prices. And we hear this all the time. You want to buy low and sell high, right? And of course, we're not even in the discount zone. So taking a loss here shouldn't even get you upset because you know damn well you're not in an area where price is giving you a discount. So you have to be cognizant that hey, this trade could get clapped. And I mentioned that several times throughout each video and even on the live sessions. Me personally, I know that you want to buy low and sell high, but when I see the setup, when structure is telling me that, hey, we want to continue higher, I will do it. Prime examples here, for instance, let's say you're looking at these lows to these highs, right? Right here. Price never even came back down to the discount zone. Price stayed here in the higher premium zones and continued to make new highs. Reasons like these, examples like these, it just leads me to continue to take the trade regardless of where you are at in the trade, where you are in the premium zone and the discount zone. Like if I see it anywhere on the chart, I will continue to take the trade. And of course, looking back here from these lows to these highs, right in there, we did come back pretty deep, gave a nice discount, right? I'm pretty sure I got clapped here as well. Knowing me taking trades, even if I see the setup up here, I'm taking that. Yes, you make some money, but then price does come back to clap you. So, these moments are just representations of, hey, you know what? Maybe you should focus more on the discount. Maybe you should be a little bit more patient, right? Instead of trying to make arguments for why you're taking trades at premium zones, maybe you got to hold yourself accountable. Like, hey, you know what? This is called growth, and it's only going to make you better. And I also agree. So I might start, in fact I will. I'm just gonna exercise more patience and just, you know what, let's only take trades in the discount zones. It just gives you more probability to be on the upside. It just relieves stress, and it also forces you to be patient. Right? That's another quality that most people lack, most traders lack, and that's why a lot of traders do fail is because of lack of patience. The market takes from the impatient and gives to the patient. So take that how you will. Take that how you will. Just really quick, let me check this out, right? These lows, let's say these lows to these highs. We came back to the 50%. Patience. But it took, how long did this take? From these highs to these lows, it took 182 days. That's half the year. It's half the year. 6 months. 6 months. You have 6 months of patience to wait for price to come to a discounted area. I would say yes. Most people have the patience to wait for their favorite brands to go on sale or discounts and all these things. Yeah. We can wait. We can wait. But yeah, let me go ahead and dive in. Thanks for coming to my TED Talk. Let's actually dive into the charts for real. I have some structure marked up, all-time highs, 22,226, previous all-time highs here, and then we have even more previous highs as well. Let's go to the monthly so you kind of see like from the top down analysis. Boom. These two highs. I could also mark up these highs in here. Boom. And we have yet to break above either one. So it seems like this monthly candle that closes in the next 6 days, it came above these highs with a wick sweeping liquidity. Now it's working its way back down, but we also have some other highs here, boom, where price could hold. Since we did close with the previous month of January, full body candle close above these highs, that indicates that price wants to continue higher. We are breaking structure to the upside, which leads us to believe we want to continue higher just based off structure alone. And with 6 days being left on this candle, we have to exercise some patience and see, are we going to close still bullish above this level, or are we going to close beneath it? Closing beneath it would be worrisome and cause for price to possibly want to sell off as well. Because again, if we go back to what we just went over, from these lows to the highs, discounts would be all the way back down here, which are the previous all-time highs from a while. It took a while for these to get broken above. It took 2 years plus, a little over 2 years or around there to really break these highs. So us finally being above, and we've ran over 5,000 points to the upside. It's fair for prices to want to take a dip. And if we do close beneath these monthly highs, right? If we close back beneath this, it would be grounds to allow price to go ahead and retrace back to these levels. And if it does, it may be very tempting to ride the sells down. It wouldn't hurt. It wouldn't hurt to just get in some low risk sells where it would just make the most sense, which we'll dive deeper into soon enough. But yeah, that's what we're looking out for. Let's go to the weekly, working our way down. Still very bullish overall, still making higher highs and higher lows. So we'll see if this weekly structure holds out. Again, we did close above these previous highs last week. Didn't quite get above here. We just swept these highs. And I always say, every time price sweeps a high or a low, there's a chance that price can reverse. You know, people are wondering why there was such a massive reversal. Is because we swept liquidity, right? Once liquidity gets swept, then there's a high chance of price reversing. But let's see, lock this up. Boom, let's go down to the daily. Now we have these significant lows that we broke beneath. We also broke beneath these lows here. Boom. You can argue these lows as well. All right, each low counts, but I'm going to mark up the first low that we broke below, which was this one. That was the very first low that indicated to us of lower prices on the daily, making higher highs, higher lows, higher highs, higher lows, higher highs, and then we broke beneath these lows, right? That was the first low, the first indication with this full body candle right here, and then we came back to retest, even sweeping more of these highs, giving you that super sniper entry, sweeping previous day high, you know, only giving you a 15 point risk, maybe 25 points with spread, and then to drop over 500 points. That is absolutely disgusting. Absolutely disgusting. Shout out to my boy Chris as well. He put me onto the previous monthly, weekly, and daily highs and lows. Those are the lowest risk areas to take a trade, right? If you sweep a previous monthly, weekly, or daily high or low, again, there's a chance of reversal. And it's not just the previous, it's any monthly, weekly, or daily. It doesn't have to be the previous. It can be 2 days before, 3 days before. I've seen it, right? So essentially all those highs and lows are significant to some degree. Okay, right? We actually came beneath these previous daily lows. We didn't sweep it. We actually closed below. So it's not a foolproof method, but again, it's an area. It's for low risk trades. Since we are at the highs, sells were more probable. That's why these sweeps didn't really matter at that point. And now it's full body close, so it's a break. So if you were looking to possibly take this to the upside, I would want to see for low risk trades, you know, another sweep of liquidity. You know, these lows, these lows, these lows. If not a sweep, then at least a retest of structure itself, right? That's also what I look for entries, either a sweep or structure being retested. Right, that's the main two caveats. And again, from, let's say, you can use these lows here, these lows, or even these. I would use these since these are the most recent lows that gave us these highs, and we are approaching, discounts. If you were to use these lows here, boom, you already are in the discount zone. And if you were to use these lows here, you're deep in the discount. So it's in a very valid area to continue to the upside on the smaller scale up close. Again, this is all still premium buys. On the grand scheme of things, we are still pretty high up, again, because these are the main lows in here that you want to be using right there to these highs. Okay, right, this is the previous higher low before the higher high. If we mark up the uptrend, right, we have higher high, higher low, or the swing high, right? Higher high, higher low, higher high, higher low, higher high is up here. So this next pullback can be the higher low that allows us to continue higher. So that's the overall structure that, if that were to happen, it would be fair. And of course, if price did work its way down, you don't want to be catching the falling knife. You can just go ahead and wait for another setup to appear. Maybe it might come down here. We don't know. The structure here is still holding. Unless we broke beneath these lows, technically this is still bullish structure, right? The first indication was, this change of character right there. Broke above these highs. We're making lower lows and lower highs. Working our way down. Go to right here, boom, lower low, lower high, lower low, lower high, lower low. Mini downtrend, and then we broke these highs, right? That was the first high we broke above. That was the first change of character, boom. And then we came back, got the retest, sniper entry, flew, came back some more, filled in some other inefficiencies, retested some more structure possibly, and then continued to break more structure to the upside, right? More bullishness. So based off of that information, we could very, very well respect this structure here. This is essentially accumulation. We had some distribution, and then it switched to accumulation. Are we going to continue higher? All we can do is either wait for liquidity to be swept from the left, right? These previous daily lows for possible low risk, and then once liquidity gets swept, you can place your buy limit there if you have confidence in the setup, or if you want to have more evidence, which is perfectly fine, you can wait for another setup, more accumulation on the 15-minute, right? At least. But if you're a super scalper, you can watch it on the 1 minute too, the 5 minute. Wait for that accumulation. Give yourself that low risk re-entry. Even giving yourself a smaller stop loss. So because this is the true stop loss down here. Any trades you take and get clapped on in between, just know that the stop loss for this accumulation schematic is the spring, which is this very last low. I know with accumulation there's all these other words like buying climax, automatic rally. I know that's all important, but the main thing when it comes to Wyckoff is going to be that spring, that last sweep of liquidity, and then breaking structure, which we broke structure here, we broke more here, broke more here, even these. So every break of structure just gave a completion of the accumulation. It just gave more confidence, more evidence. So we'll see what happens. Close beneath some lows on Friday. Cool, nice pullback. Let's wait for some accumulation here and then catch these buys, or wait for the liquidity. You can even set your buy limit here. I'm gonna have some buy limits set here, and same areas down there, just in case. But eyes open. Let's get it.